We have Brad and Rebecca with us today, who are our finance experts. The very first question is, what is making tax digital?
Sure. So there's three main schemes when it comes to making tax digital. There's the VAT scheme, there's the corporation tax scheme, and there is the ITSA scheme. And that's what we're here to talk about today. So it's the income tax for self-employed people. And that is being rolled out as of from April 2026. So whereby self-employed people and landlords must digitally report their income to HMRC based on their income thresholds. And the income thresholds change over the next couple of years, and that's something that I know is a question that's come up. So we'll go through that in one of the other slides.
Yeah, just from my side on that, I think the key with making tax digital for self-employed people to be aware of is that it's replacing the old process of submitting your self-assessment tax return. So whereby I think a lot of individuals would have maybe before obviously gone onto their Government Gateway website at the end of the year to then report all of their income only at that point in time. It's now an entirely new way of actually reporting your income throughout the year, and obviously we'll go on to speak about that in a bit more detail.
When I was reading some of the guidance recently, they mentioned how there was around about a £5 billion debt when it comes to self-employment funds that need to be retained from HMRC. So what they're saying is, yes, people are aware that they need to do their tax returns, but actually paying the returns and having it on time, there's that gap with HMRC. So what they're trying to do at the moment is actually get people submitting their returns on a more frequent basis. And that's why HMRC is now requiring, if you do have that income of over £50,000 through self-employment or property, that you're actually reporting your income on a more regular basis. Because many of times people do get to the end of the tax year and they may have lost some of their receipts, they may not know what income they've had because they haven't been keeping track of it. So it's all about organisation really, and HMRC having these things updated on a more regular basis.
Just from my side on that as well, I think that it's one of those things that a lot of people has been like, no, another administrational thing that I have to do. However, it can be a really big benefit for business owners because it really does help you to manage your cash flow better. It really helps you to make better, more informed decisions about your business throughout the year because it forces you to make sure that you are keeping your records up to date throughout the year in terms of how much you are earning, how much you are spending, and what profits you have left over and what your estimated tax bill is, rather than just leaving that last minute and doing it all just at the end of the year as part of a self-assessment filing. So I think that has also been part of HMRC's intent, is just to be able to make individuals manage their businesses a little bit better and be more informed up front as well.
Can I move on to the next question?
Sure.
Awesome. Okay. Does making tax digital apply to me?
So with making tax digital for income tax, with it being a new scheme that HMRC has rolled out, it may only apply to you depending on your income of self-employment or property. So the way that HMRC have structured this new role is that as of from April 2020, it goes off your total gross income. So that's before any expenditure for over £50,000. If you do go over the £50,000 on your self-employed income and property income, then yes, it will apply from you. And then as of from April 2027, that amount gets reduced to £30,000. But it's important to note that this is a combined amount. So say you get £20,000 from your income as a freelancer and then £30,000 from your income from a property, then that is the combined £50,000 for this taxable income year. It isn't separate. So you would need to do a return for this new scheme that HMRC have put into place.
I'm not too sure why they're not making companies do it actually. Do you, Brad?
No, I'm not sure. I think the basis with them not having companies do it at the moment is obviously most companies are VAT registered if they're a bigger company. So most companies do their VAT returns, which shows their, their turnover from sales and expenditure on a quarterly basis already. But the big hole within HMRC was that there was a lot of people who are self-employed who wasn't submitting their tax returns. Whether that be submitting them on time or whether that just be paying them on time, there was a big backlog. So some of the evidence that came out from HMRC, and you can find this on gov.uk as well for their rationale for this, was about making sure errors are picked up much sooner, making sure that returns are done on time, and so that they can see the income and have more oversight. Because with a typical person who's on payroll, HMRC sees their income every single month, whereas when you're a self-employed person, HMRC are kind of flying blind with that and only seeing their income once a year. So I think it's more just about HMRC and oversight of actually everyone's income in the UK on a more regular basis. It's one of those things that HMRC bring in these rules, and sometimes that they don't think about, what the cost could be bearing onto those individuals. And I think that's why it's also important that we also have this conversation today, because we as Addition Finance, we've actually looked at that from an individual's perspective to say, not everyone can afford these big expensive accountants. So we have an approach here at Addition whereby we scale with you. So I think our cheapest package is actually like £29 a month to really help, these founders, these sole traders, self-employed people actually be able to afford accountancy.
Awesome. Okay, I'm going to jump to the next question, which is, how often do I need to file my return?
Sure. Yeah, so HMRC have brought this into place, and the returns are quarterly. So it starts off as of from April, and the quarters run April, June, and then the return will be due by the 5th of August. Now, when I think it was Rebecca mentioned before about the annual self-assessment that you would normally do, this essentially replaces the annual assessment, which is your self-assessment tax return. This replaces that, and you report this quarterly, and then once you report it quarterly, the final return will need to be submitted by the January 31st, the exact same as your normal self-assessment would be. So yes, it is now a quarterly return, but it replaces the self-assessment at the end of the year, and we just do one final submission at the end of the year, whereby we include any income adjustments such as reliefs, pensions, allowances, dividends, but it does replace that end of year filing.
Perfect. Okay, and the next question is, I think you did touch on this earlier, Brad, but we did have this question come through on social media. Is it based on profit or revenue?
This is solely based on turnover and revenue before expenses. So it is really simple. If you have an income of over £50,000 through self-employed income or property, then this applies to you.
Okay. And then will I still need to make the tax payments every quarter?
No, so you don't need to make tax payments every quarter. The payment is due on the 1st of January, the exact same as how self-assessment runs. So it's due 1st of January after that tax year has finished. And if you owe more than £1,000, then HMRC does this payment on account, whereby one payment will be due on the 1st of January and another payment is due on the 1st of July. But no, you don't need to make payments every quarter.
Yeah, I think that's where one area of confusion has come from a lot of people, where they think that because they're filing quarterly, they think that they also now need to be making the payments quarterly. But you will get an idea of your tax computation quarterly, so that's what you will see. Obviously, it will look different depending on what filing software is being used, or how you're interacting with your accountant. But you should be getting a summary based on the cumulative revenue and expenses that you've filed in regards to what you can expect that tax bill to be, which is kind of in line with what we were saying earlier about how this new process is going to help you to manage your cash flow better and have a better idea up front about the liabilities that you're likely going to need to pay later on in the year.
Can I still use spreadsheets? I think this is a question that a lot of people have been asking, because they are using very manual, like Excel, Google Sheets. Does that still cut it?
So we'd advise it's better to invest in getting it right from day one, because using spreadsheets essentially isn't accepted by HMRC because it has to be done through an authorised HMRC integration, which is recognised. So because it's Making Tax Digital, you do have to have an accounting software or an accountancy provider that can file these returns for you. And using spreadsheets can get quite messy, and it's not a great way of tracking. So you want to use a system a bit like Edition, where we have this thing called Edition Go. You snap your receipts when you're on the go. So I would advise not to use spreadsheets, and especially because we're now in the first month of this coming live, it's better to invest from day one and get it right. So then when it comes to the end of the quarter, everything's in line.
Okay, and then you kind of like touched on it a bit there, but what do you think an accounting setup would look like? Imagine this is for someone who's possibly been doing their own books with a glove box full of receipts. And so what would an ideal setup look like to make sure that they are in line with Making Tax Digital?
Yeah, so from my side on this one, I think one of the key things that Brad mentioned before is like with our bill capture software, where everything is being captured automatically upfront. Rather than using spreadsheets, you're using an accounting software to perform your reconciliation. The best softwares will actually then, when it comes to the filing, mean that it is just the clicks of a few buttons. It's not necessarily then that you have to start copying across numbers from a spreadsheet or anything like that into a different software. It's all just handled within one software, one system. The key also with the reporting is within the filings is that it's cumulative. So when you're doing, say, for example, the filing for the second quarter, you're not only filing the figures for that second quarter, you're actually filing it a total from quarter one, then plus quarter two, what's been added on within that quarter. And so obviously, if you've got the accounting set up right, then, and you've reconciled your books up until that point in time, then that's just an automatic total that you've got then. You're not then having to sit and, figure out what the total actually is. And add it all up, so to say. Ideally, obviously, if you can afford to get some accounting support from a professional, that's going to be the best setup as well, because obviously all of these rules are new. There can be some complexities to making sure that you are getting it right, and so it is obviously going to be the best idea to try and get a professional advisor or an accountant to help you with this, especially if you're not entirely confident with how it all works, really. But yeah, Brad, I'm not sure if I've missed anything out there, or you add anything.
No, I think you could have covered it. Thanks.
Okay, great. Okay, so this has also come up quite a lot. So if someone has a job and a side hustle, does this still apply to them?
Yeah, so I think this is what a lot of people will get confused about. These new rules from HMRC can be confusing. So it only counts if you're not on the PAYE. So, for example, if you've got income and you're receiving it through a payroll, then that doesn't count. You don't need to count that into this new scheme. However, your side hustle, that will count. So you've got that threshold of £50,000 for the 26-27 tax year, and if you go over the £50,000, then yes, you're going to need to do Making Tax Digital. But if it's under the £50,000, you're absolutely fine, and you don't include your PAYE job. But that's only if your job is on PAYE, not if you're doing freelance work.
And that was, all the questions that we have. Thanks, guys. That was really great. I even learned a lot. If anybody does feel like they need a little bit of support, or if they want to have a call with Brad where they can actually ask them any questions that they have that are specific to your unique business, book a quick session with Brad where you can kind of talk it through. It would either be with Brad or Graham, depending on like schedule and availability. But thanks again, everybody, for joining us, and I look forward to the next one.
Perfect. Thank you, everyone.
Thanks, everyone.